Hi guys, sorry. We were just back there chatting with the guys that you are about to see. So I'm sure you're here to get some knowledge like me. And I would like to introduce Stan. He will come and work with our panel today. Hi, Stan.
Hi, everyone. So we're talking about making a decision on a token sale front, right? So we all have a number of financing mechanisms available to us, from angel funding to seed stages to later stage financing to debt to self-funding. And now there's this new emerging financing mechanism that's taking a lot of everyone's mind share in this space, which is token sales, ICOs, token generation events, whichever way you want to call them. They represent the same mechanism of raising funding through selling, essentially pre-selling revenue, selling a product or service. And so the panel today has a number of really key leaders in the space who are all with their companies going through a process of considering or conducting a token sale. And so our topics today are ICO, making the decision, and I want to introduce the panel that's joining me up here today. Guys. So today we have Reeve Collins, who's been a long-standing pioneer in the Bitcoin and blockchain space. He's creating a new economy around digital goods as a co-founder and CEO of BlockV. BlockV provides an innovative platform for the creation of a new class of virtual goods called VATOMs. They're an interactive smart object on blockchains, enabling ownership, scarcity, authenticity of digital goods. A really revolutionary new platform. Previously, he was a co-founder and CEO of Tether, and those of us in the crypto space know how important Tether was to the foundation and growth of this space and connecting real-world fiat with crypto. Next, we have John Paukulis, a former Paramount exec and founder and CEO of Gifts, a blockchain-enabled loyalty program. And he's doing something really different from what everyone else here is going to do, which is try to use the traditional equity offering rails as part of a process. And so Brock talked a little bit about his experience at Blockchain Capital and how they went through the traditional Reg D, Reg S path to conduct an offering. And so I think this will be a really interesting part of the conversation. William Quigley is the CEO of Opskin. It's the world's largest marketplace for video game virtual items. I don't know if you guys know this market, but it's massive. Hundreds of millions of people are playing online and using virtual goods in that space. In a very key younger demographic. He's also the managing director of Cashflow Enterprises, a cryptocurrency-focused investment vehicle that's incubated over 40 different Bitcoin, blockchain, and crypto companies. Jordan is joining us as a leader in changing how people interact with media. So he was one of the earliest employees at mp3.com, helping to reinvent how music was consumed. He was the founder of DivX, which raised over $150 million and went public. And now he's leading the Neurohacker Collective, which is applying complex systems in neuroscience to provide people with the tools to become maximally capable. And of course, we have Crystal Rose. She's the CEO and founder of Sensei, an artificial intelligence-based platform for connecting humans for device opportunities in any messenger instantly anywhere. Sensei is a venture-backed company, raised over $6 million, and is on a path to really revolutionize how humans interact through chat and using the bot technology to really kind of monetize human intelligence. Welcome, everyone. So let's just take a couple of minutes and each of you brief us in a couple of sentences on what are you working on, where you are in your token sale process, and how that's changing your business very briefly. Reeve?
Sure, my name is Reeve Collins, CEO of BlockV. So in short, BlockV is ushering in the interface moment for blockchain. If you think about the internet, the web browser came along and was the interface moment and enabled the world to build business models on top of this new protocol called the internet. If you think about mobile, the App Store is really the interface moment for mobile. It allowed the world to come along and build businesses on top of this new platform, mobile. And that's what BlockV is. It's the interface moment for blockchain. It's allowing the world, the developers around the world, to come along and build new business models on top of blockchain.
John?
Hi, my name is John Paukulis. We have a program called Gifts with a Z. The S was not available. We are doing a blockchain, global blockchain loyalty program that is much like, if anybody remembers S&H green stamps of the past or blue chip stamps. And what you do is you collect them in stores and you put them into a wallet. So we have the coin, which is a token. You put them into a wallet, and when you reach a certain amount, you can cash them out. We are doing a crowdfunder campaign. I guess we're called the first pre-ICO on an SEC-regulated portal. It's a convertible note. It's not a token, but we are selling these notes with a bonus of tokens. For every dollar spent, you get a token. So that's my experience. I'm a businessman, so I'm not a blockchain guy. I'm trying to move my business onto the blockchain. We have about 1 million people in our database. So we're taking a risk here, but I'm very excited about it.
William?
Yeah. Hi, William Quigley with Clearstone Venture Partners and Opskins, as Stan mentioned previously. I've been involved in the crypto space since the very early days of it, and at its core, of course, it's about moving payments or moving value from one person to another. In the company I run now called Opskins, we move a lot of money in very small dollar amounts between people across the world. These are people who buy and sell video game virtual items. And the magic of cryptos really is reinforced when you're trying to do that at a very broad scale. You're trying to enable people to transact at sub $10 amounts from in one currency to another. That's the real magic, I think, of cryptos, because there is no way in the world today to move money from one person to another instantly cross-border. No way to do it, and when you do it through international ACH or bank wires, it can take 3 days or longer, and the fees will often eat up the majority of the amount you're transferring if it's under $10. So this is the business problem that Opskins is trying to solve by launching a token called WAX, which will enable people who trade virtual items to use a smart contract to do it with very low fees and with an assurance that they're going to get what they asked for. Because anytime you deal with people you don't know, cross-border, there's always a risk that the other counterparty isn't going to deliver. And my company has spent many tens of millions of dollars to try to reduce that counterparty risk. With the blockchain and with smart contracts, almost anybody can do that for a meager amount. And in our view, this is where the world is going. And as a result, we're building this blockchain platform to accommodate the 400 or so million people who trade items every day.
Jordan?
Hi, my name is Jordan Greenhall. I'm part of a group that spends all of our time seeking out and investigating deeply the most important things that are happening in the world. As I'm sure many people here understand, the blockchain, and more specifically, the decentralized autonomous organization, is showing significant signs of being a decisive shift in the nature of how human beings organize themselves, and as a consequence may in fact be one of the most important things happening in the world right now. So we're spending a lot of time right now focusing on how to put together the right kind of ecosystem so that this transition occurs in a way that is to the benefit of everyone.
Crystal?
Hi, I'm Crystal Rose, the CEO of Sensei. Sensei is an interoperable messaging platform that connects all humans everywhere, across any of your favorite messengers, any popular messenger. You could be on Facebook and talk to someone on Slack. We've created a transactional model around this as well, so we allow people to exchange value instantly through chat. And just like Quigley said, globally, value exchange is really important to be able to be done instantaneously and at very, very small amounts. So our users transact 20 million coins across all chat messengers, and that was really our first proof of concept. We're launching a token called Sense, and Sense is the value of your human capital. Our goal is to allow every human to find the most value of their skills and knowledge and life experience and be able to transact them instantly with anyone. And so we do that using chat messengers today, and tomorrow that could be any form of connectivity. Today it's a network of chatbots, and so really we're taking chatbots, putting them on the blockchain. We have underlying technology that is founded in AI, but I believe the future of intelligence is not artificial, it's human.
Thank you. So, William, I'll ask you the first tough question. So we're here at the Crowd Invest Summit, and there are various modes of raising funding for a company. Why is a token sale the right fit for you versus debt versus equity? You run a massively successful business. Why go down this path?
Yeah, so the question, why do a fundraising using tokens as opposed to more traditional methods, debt or venture capital? The simple reason is because the people who are funding that business we're creating, it's called the WAX platform, are also the primary users of it. And as a result, we're combining people who are providing the capital to make something work and grow with a reward system, and that reward system involves, if some of you are familiar with the different protocols of the blockchain, this would be the proof of stake model. Proof of stake meaning essentially people who are owners of the coins accrue some value for using those coins in different ways. And in our view, the best way to promote the fact that there's a better way if you are a video gamer and you want to sell your $2,000 CSGO Dragon Lore image, which that's probably a cheap price for those. The best way to do that is with the smart contract. You reduce the risk of fraud, you lower the opportunity for somebody to charge you a lot more fees than is necessary. And so in our view, if you want to promote a particular capability, and that capability can be encapsulated in a token, the best way to do that would be to invite those people to come in and be part of the builders of the platform that we're creating. So that's the fundamental reason. There's a very strong use case for a smart contract with what we do. And at this point in time, there's a lot of interest in exploring how to use smart contracts. And we figured, well, we have taught many millions of people how to trade virtual items. We operate in about 16 different languages, accept over 90 currencies. And anybody who trades actively these items that we sell on our site will understand that going in and out of different currencies is costly and it's time consuming. So for us, the hope is that as we illustrate the value of the WAX platform, the same people who believe that they can earn some value by using it will also benefit from the appreciation of those coins.
Yeah, I think that's an incredibly important point, that tokens in many ways are more than just funds. They're a way of engaging with your audience. Crystal, what about you? Why is this the right way to fund the Sense vision of the business?
I think the first thing is it's really about the community, and it's about the people who are using the platform the most are creating the most value. So we finally have a value system in which it's not that the entire equity of this company or the entire value that is produced by it is going into one centralized place. We have the opportunity to provide value to the people who use it every day. And so I think that's the number one thing that we've seen is by providing a token system, and really on our closed loop system, it's simply a show of gratitude. It's an intangible, unexchangeable sort of value system, but it exists like any points-based system where people are on the platform using it every day, like Reddit Karma points. You know, you're earning them because there's something that you feel there's a value, but now the next step is really providing a value exchange. So for us, we have the 20 million coins on the system, and that was a really good proof of concept to say people do want to genuinely give each other value for the things that they're providing. I think that it's the right way in terms of transaction. We did do pilot tests with all of the different types of fiat money providers. We had Stripe and PayPal, and what we saw was that for our audience in particular, we have a very large user base of the next generation of digital currency users because they don't really have bank accounts. Even the 16 to 25 demographic, really uninterested in credit cards and bank accounts and in any other intermediary because they're too smart for it. They don't want their money locked up at a bank. They want to have it directly, and they don't also want a paper trail. They don't want to be tracked on what they do, even if that's down to the parent level. So there are a lot of compelling reasons to use a digital currency that exists in the hands of the user. And I think the other thing is, within the global ecosystem of all of these products, if we can have cents tradable for VATMs, or the Block V currencies, that allows people to continue to fluidly use the things that they love and continue to not have to worry about exchanging out for any kind of transaction fee. So it's really two things. It's about giving that value to the community and making them feel empowered, and it's also about just the pure economics of it. It's so much easier.
Yes, so this is a really interesting point we'll explore in a little bit, is that having the capability to create this new currency can actually drive fairly low user acquisition costs and create a massive network effects within your company's ecosystem, basically for free. What people have been paying for in AdWords and other mechanisms is now basically available free to you by engaging people through this token funding mechanism. Reeve, what about your business? So why are tokens at the core of your business and are organic to what you're doing?
Yeah, I really want to echo what William and Crystal said. These are the business models of the future. And the reason being is if you think about income inequality, you don't really look at that in a corporate setting. But look at all of the corporations like Facebook or any other company. The owners, the founders, make 100% of the money. The constituents, the contributors, the 2 billion people around the world that actually made and contributed all that value, they receive nothing out of that transaction. And that's why these are the business models of the future. When you tokenize that, you enable these corporations and these ecosystems to distribute that value to the people who contribute. And so fundamentally, that is the use of the token. More specifically, or I should say that's the reason behind these token models. More specifically, how it's used in the Block V ecosystem is that we believe this new asset class we've created, a VATM, which is this smart digital object that's written to blockchains, is going to be the way the world communicates in the future. Because today you communicate just simply through messages. But now, due to the ability to create unique digital items that are programmable, experiential, they have video, they have images, now a brand or an individual can provide someone else this really cool communication that is an object of value. And so V, our network token, enables developers to create and produce these VATMs. It enables these developers to pay for the long-running process of the VATMs. And also it enables us to reward and incentivize the constituents, the contributors of the network, the users of VATMs. We can incentivize different behaviors, send it to 5 friends, go and redeem it, do X and Y, and earn V. And lastly, we have a version of mining called cyclers. And these cyclers confirm all these atomic transactions. If I send VATMs here, or the different long-running processes, or it runs some videos, that costs a couple cents a year. And so these cyclers are paid in V. So the V token is very essential to the health of the ecosystem and the growth. And in the end, ultimately, it helps us distribute the wealth created from this new ecosystem to everyone involved.
So I think one important theme that's coming through is that blockchain and tokens are at the core of these business models, right? One of the things we're starting to see in the space that's admittedly a little bit frothy is that you now have companies that are creating tokens that actually don't have an organic use in the company's ecosystem or any fundamental economic value in how the company transacts. And I think what's key and important to to the purchasers and users of these systems is that there's a really clear organic use case for how tokens in the blockchain accelerate the businesses. John, let me ask you a little bit about the marketing side of this. So do you think there is meaningful value to tokens as a customer acquisition mechanism? And how are you thinking about your 1 million+ customers in the database and converting those folks into crypto wallet holders, right?
That's a challenge. My thought is that the way to get adoption is to give something away for free. And that means for the clients and as well as the consumer. We have a free loyalty program, and we can do this as a result of the blockchain. I think that for us, the crowdfunding platform has been also a way for us to get adoption for clients. In fact, we had calls from Abu Dhabi, from Yas Mall, as a result of our funding. They are interested in crypto as a loyalty point. We're like tokenized Amazon gift codes. I think that for us, we have two challenges. One is the adoption of it for our existing panel, our existing membership. We have a panel of people who take surveys, and we pay them points right now. They're called Itcoin, which we did back in 2012. I think that it's going to be a challenge for clients, but I think there's also an excitement level for us.
Do you think it's easier to convert your existing customers into crypto wallet holders or new token buyers into customers?
I think that as long as you don't change people's behavior, it will be easy. And so my goal is to keep our exact same program. But all we're going to do is we're going to move to the blockchain, and we're going to, instead of having points, because they're already used to earning Itcoin, we're going to tokenize these, and there is some mechanics issues that we're working with right now, because we're just doing this. We just launched our pre-ICO. We don't even have our white paper finished. These are the exact challenges I'm having right now, but it's so exciting that our members can't wait for it because they think there's a value to it. They think that their points are going to go up in value. So I'm all for that.
Absolutely. And William, in your business, are you hoping to convert hundreds of millions of game players into crypto wallet holders, or millions of crypto folks into gamers and those trading virtual goods?
Yeah, well, the question is, are the crypto people going to go into the industry that I'm in now, or are a lot of people in the industry I'm in now going to become crypto people? It will be the latter, and the reason is because, all the people in this audience represent a sizable fraction of the people who know about Bitcoin and cryptos. That's a little bit of an exaggeration, but not much. There are about 27 million or so crypto wallets, meaning people who've downloaded the crypto. Actually, when you reduce those to just the uniques and you get out all the duplicates, it's closer about 5 million people globally. 5 million people globally who use cryptos. And even of those, there's a small fraction of that amount that use them in commerce. My customer base, they're generally 15 to 30-year-olds who play a lot of video games. They're all over the world, these 400 million or so people who trade items. They really don't know a lot about cryptos. They know a lot about trading stores of value, because that's what these video game items are. They're stores of value. But it is a completely different vernacular from what they're used to. How one acquires a crypto wallet and safeguards things. I think the biggest challenge that all of these ICO issuers are going to have to help solve is how we make it much easier for the average consumer to acquire a crypto and to trade that crypto and to safeguard it. Because those are the things that today don't don't really ever enter into the consciousness of most people. Yeah, you worry about your password for your PayPal account or your Venmo account or your PaySafe card, but for the most part, the rules are such that if you do get ripped off, you're indemnified by those financial institutions. In cryptos, you're on your own, and that's what's compelled the regulatory response that we've seen in the last, call it, maybe 3 years. Oh, wait a minute, these people aren't aware that they could lose everything. Now, in my industry, they are aware they can lose everything. They do it all the time. The reason Opskins was created is because people were trading very expensive items back and forth and often getting ripped off. So we were an intermediary. We would take the money, we would take the item, and we'd hand it to the people who were supposed to be part of the exchange. At some point, we're going to hear about these smart contracts and how they work. At some point, those smart contracts will do a lot of the work that the human beings work, and I think they'll do it better. But the principal problem that maybe some of you in the audience as well can help solve is how to make this a much more approachable technology. There was a time when the internet was intimidating. And I'd say the crypto space is even more intimidating. So those are the things maybe with all these coins that people are collecting that we'll start to invest in.
So it's interesting how global the crypto space is. As we, in my business, see the flow of purchasers into various transactions, it's amazing. We see more than 80 countries represented that participate, of purchasers that participate in these token sales. Jordan, I'm curious, how are you thinking about making your business more global through this mechanism, through a token sale, and how does it play well with the DAO?
Well, I'd actually kind of reverse it. In this space, everything is intrinsically global. You don't actually make it more global. You figure out how to take advantage of the fact that it's always already completely global, which is, I think, the essence of why this new mode of organization, which is, I think, been named the DAO, and I think that's a perfectly fine name for it, is so powerful. Because in the legacy economy, we ended up in circumstances where individuals' capacity to find ways to contribute their highest form of value and to collaborate with other people in ways that were able to generate the most collaborative value were constrained by a wide variety of different kinds of logistical elements. You had to use legal contracts in your local jurisdiction, you formed corporations in legacy nation states, you used money that was tied to particular old school environments, and of course communication was difficult. The internet and mobility have done a very good job of eliminating the communications challenge, and what's happening right now is that the blockchain space is beginning to figure out how to eliminate all of the other kinds of challenge. So as a consequence, all of these envelopes or all of these sort of cellular membranes that have constrained and contained people's ability to find, collaborate, and share value are being comprehensively disrupted. So concepts like corporations and probably even concepts like nation states are the sorts of things that are going to be going away as this wave continues to crest and do what it does. So in that kind of context, I think the challenge is actually to say, okay, this is the wave, and it's a very big wave. So it's more of how does one figure out how to position on that wave to catch the most energy that it has to give.
Crystal, what about your business? I mean, you guys have over 3 million customers, interact with large platforms like Kik and Telegram and WeChat. How is this going to make your business more global, and how is it going to change the way you think about your customers?
So we do have a global company. We have people in almost every country, and it's really fascinating to see the way that they interact. I think one of the things that is going to radically change everything for us and for our user base and for anyone that's starting to use any kind of digital currencies is that they're going to understand that there is a value exchange in which everyone can be equal. And when I say that, it's because if you look at the global economy today and you look at the money that we use, maybe think of it backed by gold. If you use that as a standard, then everyone's money is worth something different, and many of the countries feel undervalued. They feel like we have, the currency that everyone wants the most of. We're fortunate, and why would I want to change my USD for your Fijian dollars or some other currency? And I think that's the difference. A big difference is we're valuing human capital, meaning we value your knowledge and the things that you can contribute. Human capital is the thing that you can put out to society and contribute, and it's also the thing that you can consume. And there's an equal value exchange based on that. So, it will be a much faster adoption globally. When I was just in Africa, I met with some of the people from one of the largest telcos, and I learned that in Africa they exchange prepaid cell phone minutes as currency, because that's the most valuable thing to a lot of people there. That sounds a lot like Bitcoin, and it sounds a lot like cents. It sounds a lot like any digital currency in which I've assigned a value and you've accepted it, and now it's, we all see that as our main value exchange. So I think that globally we're going to see a shift when people value things differently. They value their time. You have attention as a metric for value exchange, like the basic attention token. So I think that's the big shift, is really understanding that we are equalizing the playing field of access, we're equalizing value, and I think that becomes a much, much better, stronger global economy.
That's great, and I love that what we keep coming back to is that tokens are not just a financing tool, that it really fundamentally changes your business. And when you approach this process, if you start thinking about a crowd sale, think about your business first and how it's going to transform what you do day to day, how you transact with customers, what it's going to do to your customer acquisition plan, what it's going to do to your, even to your team. And so I think we should switch and talk a little bit about the token sale process itself. And so, Reeve, let me ask you, how has, you're down the path, how has this changed your company, your team, from a headcount standpoint, from a fundamental structure standpoint, from the way you think about your business versus where you were 3 or 4 months ago?
Yeah, it's a great point, because it's something you really have to think about, because a lot of companies who've started off with the traditional equity model and then have realized that transitioning to a token-based model is significantly beneficial both to the way it's structured and to the ecosystem that they're creating, there's a lot of decisions to be made, especially around the equity in your investors. So for Block V, we're doing our ICO on September 21st. And there was a lot of thought in the architecture of how we're going to do this, because in the past we'd taken in almost $4 million to build out the platform. And we realized the best move is to open source a lot of this technology to create this platform for the world to access and build VATMs. However, we still have these investors. So what we've done, and if anyone's debating on how to make a transition to a token, you need to realize that if you utilize a token-based model, it's going to be conflicting with your equity. So you have to really be careful and make sure that it's done in a very thought-out manner. So we've created 2 distinctly different companies. One is an equity-based company, because our belief is we're creating this global platform that's going to be open source for developers to build VATMs and for developers to come in and build for-profit companies on top of it. So we have one company that's going to be the first development partner that will be a for-profit company built on top of the platform, and that is an equity-based company. However, the platform and the ability to reward all of the contributors around the world who utilize the platform, that's a token-based model. And so we've separated the 2 apart completely and ensured that there was still the asset base and a business model for a for-profit model built on top, because we want to showcase that to the world, how other companies can build on top of this platform, because ultimately that's what's going to increase the value of the token for the platform, is when other companies build and there's more demand for the product, which is a VATM. So it will be very detailed or very specific to each business case, but you have to think through it to ensure that if you're going to do a token model, that has to be your #1 focus, is to increase the value of the token. I am the CEO of Block V, and that's my only goal, is to ensure that there's value in the token. Separately, there's another company that is ensuring that their fiduciary duty is to the investors.
So there are 2 sort of major modes in terms of structuring that now exist. One is what Reeve described, which used to be known as the foundation model, but as tax structuring and regulatory thinking is changing, has evolved to basically an open source model where you take a piece of the intellectual property that you've developed that's massively beneficial to a large ecosystem, and you open source it, and that entity creates a token. The other path is a platform path, which is a company leveraging tokens in its own ecosystem for the benefit of its own users, and then considering those other structuring options. And so, Crystal, I'll put you on the spot a little bit. So you're issuing tokens from Sensei. You're issuing tokens from Sensei, and building a new business called Sense. I know you went through the same sort of thinking around the foundation. What were some of those considerations, and as you work through it?
It's been a really interesting journey and conversation. So I did go through my entire cap table and have a conversation with our investors and upfront see how they feel about it, get a temperature gauge, what is everyone's feedback. Primarily, I think LA is extremely excited and bullish in the crypto space. San Francisco has had a little bit of a learning curve, and they have ramped up a bit. But I think the core thinking was, I have a fiduciary responsibility to my investors who have trusted me with this cash and have expected some sort of return. Now, am I going to 100x their money and have a profit motive as my primary goal? That's something that changed when I realized that our community is the lifeblood of everything we're doing. It's our heartbeat. It's why we do this. And so then I had to start thinking about the other model. What makes the most sense? What do we open source? We have 25 different defensible areas on our patent. What do I open up as IP? It's a big challenge to think about that, but we did see the same thing as what Reeve mentioned, that we have a huge underlying technology that is so powerful that if we just made it for our own application, Sensei would be amazing, but it wouldn't be giving the full benefit and value of what we've built to the world. We really want to leverage other developers. Internally in our own company, we've had 2 employees already spin out companies, and that was a big motivation to continue to encourage entrepreneurs, encourage people to build on top of it. When we looked at the model, we looked at the difference of equity structures and the foundation structure. I actually really wanted to move that direction. I fundamentally believed that everything should be open sourced and that the foundation should exist as a nonprofit, and that this separate entity really should be the sort of main center force of all the new technology. And that would come with a licensing fee to the corporation, so we would basically be selling our software. In the end, we realized that we are one company. I have a board, and I have still a responsibility to make a profit, but I think that the profit can be used in better ways. And so we did decide to go with a model that is a subsidiary-based model. So it's a wholly owned company. Sense is going to be wholly owned by a new entity that represents a company within Sensei. And that also ensures that I can raise another round of venture. So in the event that we're scaling and growing, and the reason that we raised money the first time is we were growing so quickly that we had to raise capital in order to facilitate that sort of growth. I think that it gives an option in the future.
Absolutely. And so, William, let me ask you to put your VC hat on, right? Imagine you have a company that's coming to you and says, I want to do a token sale, right? And so on the one hand, you're excited because that means it's non-dilutive financing, your returns are hyper-levered, great. On the other hand, that means your exit is probably now much further out because the company is well-funded, it doesn't necessarily need to do anything strategic on the M&A side, it may not be thinking about an IPO in the near term. How are you resolving those two conflicts? What's most important, and how are you thinking through that process from the financial side and from the governance side?
Well, I'll just caveat all this by saying the quantity of information, knowledge, expertise that one needs to be competent in this field is truly staggering to me. The venture model has evolved into almost like a textbook paint-by-numbers approach. We all do Delaware C Corps, right? Everybody understands those. You have 5 board members. You got an option pool. It vests over 4 years. There's a lot of things that are just they've become fully institutionalized among the venture world, and part of that is because at each new round of capital raising, you need to make sure that what you've created for the next round of investors is very familiar, because when it's familiar, people are comfortable. So doing the hybrid, venture model plus then a crowd sale or a token sale introduces an educational burden, right, that one has to do for their investors. Now, if you ask me, it's well worth that. I would certainly say, so it takes you 3 extra months to figure it out and to explain to a new group of investors what you've done. I think that's fine. Stan, you mentioned liquidity. The bane of the existence of venture capitalists is the lack of liquidity. The average investment probably takes 8 to 10 years to get liquid. So that money sits there for a long, long time. And that is probably the least appealing part of the industry that I'm in. The staggering thing about cryptos is if a business is created and formed around a crypto platform, you can actually have liquidity in that as an owner of those tokens immediately in the event that there's a decentralized exchange that's using your token, or maybe a few months until a more centralized exchange decides to trade your token. So that is what originally appealed to me. I almost couldn't believe it. Wow, you can actually get really attractive returns. You can provide a sufficient amount of capital to grow a risky business, and you can get liquidity along the way. So those things are so appealing that I think when any VC ultimately understands it, they only want to do this, which is why Brock Pierce earlier today said, hey, the venture model is over. Well, maybe it's not over completely, but I know as a 20-year VC, you ask me, would I rather be working with crypto-related companies or with traditional venture capital style investment vehicles, and I'll take the crypto side any day of the week. The last thing I'll comment here is that structurally, these things are a little complicated. You get used to them, right? But things like foundations are not things venture capitalists know anything about. A lot of these now have offshore elements to them, principally because probably the least interesting area for crypto expansion is right here in the United States. We have great banking, we have great technology. Most people have pretty convenient ways to transfer value. E-commerce sites have figured a lot out. But when you have asymmetrical risk, which you often do as an e-commerce company in the US, where your customer overseas, you don't know, you can't easily KYC them, can you trust the fact that if they deposit something with a credit card or some other payment method, it's not going to be reversed? Those are problems. If you could accept a crypto, either in a smart contract or something like Bitcoin, then knowing that transaction is immutable means you feel perfectly comfortable sending that particular customer overseas, whatever it is that they bought. So the benefits of the transparency, the decentralized nature, the immutability of the blockchain is going to really drive a lot of powerful, I think, value creation in the e-commerce space. VCs like the e-commerce space. I think as entrepreneurs are growing up and they're learning about blockchain, they're going to want, if they're building an e-commerce company, to migrate towards something on the crypto side. So the VCs in this case are probably going to be following the lead of these entrepreneurs. Mm-hmm. But in the end, I think it's too powerful of a value for us to ignore.
Absolutely. I think from our perspective, we see more institutional purchasers in transactions. So obviously blockchain capital was a leader with their offering. And then we see folks like Tim and Adam Draper with their personal vehicles and funds. Folks like USV and many others are now very constructively looking at the space, trying to fundraise for it as separate vehicles and really do a lot of bottom-up technical work to understand the merits of various tokens and really come into the space.
I'd like to give one kudos to Tim Draper, a very famous venture capitalist. He, when we did Idealab Capital Partners, which was an incubator, incubators seem ordinary now, but in the mid-90s, they were pretty weird vehicles. Oh, you're going to build the company as the investor and then grow it with other venture capital. It was controversial. But Tim was the lead investor in the first 6 deals we did. And he was also, I want to say 2012, 2013, the first VC I knew who said, you know what, this blockchain and crypto stuff is going to be important in the future of technology. So he's been leading that trend for a while.
So I want to talk about legal modes for a second. So this space is moving so quickly. 3-4 months ago, we kind of had two things. We had security tokens and we had utility tokens. And in the last few months, we've had a number of innovations in this developing area of law, including SAFTs, which are essentially securities for future delivery of tokens. We had new modes using existing rails. And so, John, I wanted to ask you, you are kind of creating a hybrid, right? You're doing a pre-ICO using essentially Reg D 506C, which is a very traditional, post-2013 set of rails for early stage funding. And you're giving people tokens, and then you're doing a SAFT, and then you're doing a token sale, which I'm assuming is a utility token.
Yes,
so
I'm
everything's
running
on the
fast.
Table.
Yeah, we decided to do it this way because when I mentioned to everyone that I was doing an ICO, they said they would come visit me in prison. So I took that literally, and I have 2 children, and so what I decided to do was to really look into the legal piece of this. I'm sure there's a lot of attorneys in the audience, actually. When I first started talking to attorneys, they said, well, it'll be about $10,000 to do an ICO. Then 2 weeks later, I talked to them, it's now $50,000, and now they're telling me it's $250,000. So what we decided to do was to start off with a simple Reg D that we would do on Crowdfunder, but we had a race to get it done because we wanted to be the first company on Crowdfunder to release a pre-ICO, which is this hybrid that we have of a 506C, but we're giving away bonus tokens. And I can tell you that it's a good thing and a bad thing, and I'll tell you why. The good thing is that the people who are traditional investors are excited about investing instead of getting tokens. The token world, the crypto guys don't love the securities laws. So we've got a little mixture of the two, but we raised $500,000 in a day. So, and that was selling convertible notes with these token kickers. The next round is going to be a SAFT, a simple agreement for future tokens. That's going to be an extension of our 506C. To raise at a 50% discount. We're giving a 100% discount for our convertible notes, 50% on the SAFT, and then we're going out to sell with the ICO. A lot smarter guys than me explained this is the way to go, but I have to say, I'm very excited about the securities piece of this because that's my world as an investor. So we'll wait to see what happens with the SAFT. We have from the September 15th to the 20th on Crowdfunder. If you look up gifts, we accept Bitcoin and Ethereum. We're setting up the wallets right now for investors who are accredited for the 506C. That hasn't been done before.
There's a lot going on there.
I know. Well, actually, Crowdfunder is thinking about, Steve McClurg is an advisor. He's the president and COO of Crowdfunder, and he's an advisor on our company. He is saying that the crowdfunding world wants to accept tokens because what's happening in Crowdfunder is that you have a difficult time collecting money. Sure, you can click on the reservation, you can take the reservation all day, but it's keeping the reservation is what's important. So you try to collect the money from investors, it's always a difficult thing. So what they're deciding, if they could allow people to give that token at that time, they're collecting right away so they don't have to have a reservation. So I see tokens changing even the crowdfunding world.
That's really interesting. Jordan, how are you thinking about your path with the DAO structure? Is it going to be a utility token path, a securities token path, or something very different?
Sure. So as you mentioned in the introduction, I was involved in taking 3 companies from venture funding to IPO on the NASDAQ. So I'm sort of very familiar with the nature of that game. And you're right, it has definitely become quite a formula. And so when at Emergent, we decided to go a complete pure play, decentralized organization, it was not taken lightly. And it's funny, for sure, the degree to which one is actually front-loading regulatory and legal is amusing. Usually you don't hire lobbyists until you're well past $1 billion company. These days, it's the first person you bring in. So we're actually intending to go completely as a decentralized organization, which means by definition, we're only using utility tokens. In fact, only a whole cluster of utility tokens, because we're taking a completely different approach to the concept of what tokens are even for. The idea of, say, funding or equity or even currency, I think ultimately will prove to be maybe useful, but ultimately limiting metaphors. That we're actually in the process of developing something which is actually novel, at least among human beings, to enable these things that are self-organizing collective intelligences to emerge and do their work. So I actually personally use the phrase an API to the legacy economy for the various kinds of legal formalisms that one has to go through to be able to avoid jail time. But at the end of the day, that's actually what we're doing. Right? We're actually engaging in the things that are necessary to kind of pay homage to the legacy governments and economic functions that still control most of the economic and political power in the world. But at the end of the day, we're trying to do something completely new. And if we do it right, I think we're in the process right now of building something which is meaningfully more important than the sum total of the internet and mobility. So we have to keep that in mind, that this is quite a big deal.
So you're talking about challenging kind of a traditional notion of what a company is and kind of the existing suite of regulations. And let me double click on that from kind of a securities perspective. Reeve, as you thought about the structure for both Atomic and Block V, what were some of the regulatory considerations and the discussions you had internally? I know that Block V is a Swiss company, Atomic is a US company. What is the interplay of regulations? What were the concerns that you were working through as you went down this path?
Yeah, one of the really interesting things that these new types of models have opened up is access to global participants. And that's what we're talking about, how these token sales are global. And for us to have a Swiss-based company, so there's a lot of thought in going, where's the best place to domicile and what makes the most sense. Zug, Switzerland, actually has put a lot of thought and a lot of regulation positive there for their crypto space. And so it does make a lot of sense for companies to investigate setting up there. We already had our CTO and head of development living there just coincidentally. And so it made the most sense for us to create a Swiss-based company. And since it's a Swiss-based company with with just Swiss shareholders and no real business being done in the US, and the fact that it's a utility token, as far as the level of risk, we're all in this risk bucket due to the industry we're in, but as far as where we fall in that bucket, it's very slim. So by doing it all right and doing it outside of the US and ensuring that we're ticking all the boxes, we feel our risk profile is very low.
Mm-hmm. Crystal, same question to you. You guys are a traditional plain vanilla Delaware company with a subsidiary that's going to do the token sale. What were some of the conversations you had with your board about the regulatory component of this process? What were the risks and considerations that they were playing with?
I'm fortunate that my board consists of everyone very very knowledgeable or understanding of what the future holds for venture. We had a lot of thoughts about the Cayman entity or offshore. We ended up with Cayman, but any offshore entity, how is this going to affect the existing business structure? What are the implications for taxes? And I think a lot of that conversation, we followed the models that were working. So we followed the model of EOS and the model of others that are working in terms of the offshore. We had already had expansion plans into China, so we're in WeChat today. It's our next product that we're launching. That's going to be a massive lift on our community. And as we looked at globalization, we thought, well, what makes the most sense? Is it Singapore? Is it Switzerland? Is it Cayman? But I think essentially the goal is simply putting a hub somewhere that allows us to have a global presence and takes us away from the restrictions of what's going on in the US. And I think overall, the board had really incredible questions. My investors, everyone who has a stake in the company has been involved and has asked a lot of questions. I think that we've sort of netted out in the same place. So it seems that, you know, as Quigley said, there's a model that is form fit with VC, and that's why I have a Delaware corporation, and that's why I have board members, and now I think that this structure around ICOs is being fulfilled in the same way. It's not a template. You absolutely cannot use the same structure as someone else just because it's working for them, because it's so unique. But I think that we're finding that a lot of the regulatory questions are answered. One of the best days I had was when I got an email from my investors saying, you know, oh my God, the SEC has a stance on this. Oh no, you know, and I'm like, oh yes, finally, we have some feedback from the government on where they think it's going, and that's better. Having that regulation is better.
I agree with that 100%. Having, you know, the piece from the SEC was actually a very graceful way of addressing this whole space, and in many ways reaffirming what the practitioners were already doing and how they were using the Howey test to frame whether something is a security or isn't, and really doing it with a light touch. I want to get to a question that I'm sure everyone else here is curious about, which is every large financing takes a lot of effort, resources, and is obviously not cheap. What is this process at the end of the day going to cost your business? John, I'll start with you because you seem to have the most legally complex structure one could imagine.
You mean how much is this going to cost from start to finish of the ICO?
To execute. Right? Both. So on the legal side, on the accounting side, on the marketing side, and even in terms of human resources. I'm assuming all of your company's working on this 24/7.
Let me pull out my calculator. Hold on a second here. Well, it's not going to be cheap, but I'm paying in tokens.
Okay.
So
your service providers are bought in. That's fantastic.
They have bought in. Yeah, we have head of NBC Primetime TV. We have the Televisa family. We have a huge group of advisors and investors already in. They invested with real dollars. However, what we're paying out in tokens. Now, not everything, but for big chunks of it, yes. So I would say if I was to translate into dollars, I'd have to go to the mechanics of my token, but they're counting on it going up.
Got it. William, what about you? I know you think more in real dollars than in tokens these days.
I think in terms of Bitcoin, actually, but which are very real. Well, if you put it this way, if you're going to take a company public on NASDAQ, comply with Sarbanes-Oxley, Dodd-Frank, have a GC, a CFO, all that jazz, audited financials, maybe $3 million is what you'd spend if you do it really, really well, and then add ongoing $1 million+ a year for compliance. All of those things, I'd say you get with maybe $500,000, maybe a little bit more if you're going to do an ICO. You could raise almost the same amount, sometimes more. So it's actually quite affordable compared to the alternatives. And the liquidity is probably better than what you'd get as a microcap company on a US or European exchange.
You know, I do want to say one thing, that we are raising the crowdfunder raise for $500,000 is to pay for the next round, and then the next round will pay for the next round. So there are hard costs. Wasn't being flippant.
Absolutely. Well, we're running out of time here. I want to thank everyone on the panel today. It's a fascinating discussion, and I really appreciate the insight from everyone. Thanks very much.